All right, y'all. So I want to let you in on a not so well-known secret. And that is that interest rates do not matter as long as your numbers make sense. I know that there is so much chatter out here around interest rates continuing to climb. You know, this is the highest we've seen in a while. Blah, 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 blah. It's just mumbo jumbo. They're going to continue to adjust. They're going to rise, they're going to fall. They're going to rise, they're going to fall. But what you need to be concerned with is the fact that your numbers make sense. You can't control what the market is doing. You can't control what the economy is doing. You need to make sure your numbers make sense. And how can you do that? That's by doing your research. So the number one thing I recommend people do is after you get pre-approved, look at what the interest rate is that lender approves you for. Then take that interest rate and start shopping around. Look at credit lenders, look at community banks, look at other lenders and see what they're offering. The great thing about Google is that it's free. And websites are literally required to update every single day with the interest rate of the day. So in some cases, you don't even have to call the lender. Literally, like you can just look on their website, go to the mortgage section, look for the rates of the day, take a screenshot, because what you're gonna do is you're gonna see if your lender is willing to match what you've seen on competitor sites. Put a little fire under their butt. Say that they've also pre-approved you for this rate. What can you do? Can you match that? Each lender's gonna do ultimately what they wanna do. But this is the leverage that you have to play. This is the game that you have to play. If you have an ideal amount of how much money you wanna spend, those are your numbers. So then you need to consider the principal, you need to consider the interest, you need to consider the taxes. The tax rate's very important. You can find that on the listing. Zillow, Redfin, they're all listed there. And you need to consider the HOA as well. But then you need to consider the last I, which is insurance. That includes PMI if you're putting down less than 20%. And that includes homeowners insurance, which should be required for everybody. So if you total all that up, which you won't know until you actually get a house under contract. But if you know that the interest rate is 6% and you're looking at a home at about $200,000, then you need to run the numbers. You need to go back to that listing that you're considering or that home that you're considering, get the purchase price, just assume that, divide it into however long you plan to keep the home. 360 months is 5 years. So you would get the principal on that listing, you'll get the interest on that listing, put in the 6% like they put on your actual, pre-approval, calculate consider the HOAs, which is usually hidden as like a maintenance fee on the listing. Add that in. It's gonna be a little manual work for you to do all this because they don't usually include the HOA in the sort of little calculator, the mortgage calculator on the listing. But what you'll need is the principal. They do provide that. Make sure it's applicable to the interest rate that the lender has pre-approved you for. So that takes care of P&I. Taxes, the taxes are also on the listing. It's like listed as like tax rate. So it'll have the tax rate, maybe like 2.3, and then it'll have a slash and it'll tell you what it is, equivalent to. So 2.3 slash 3,400, for example. So you can run your own sort of number. So you already have the P and the I from the listing. You have the taxes from the listing. Again, the tax rate's visible on every single listing. It doesn't matter which service provider you're using. And then the insurance. Now that's something you don't know, but you can just assume around $1,000, so use that, run your PITI and see if it fits within the budget that you've considered or the numbers that you've considered. If you know that you don't want to spend over $2,000 and you did all this and you realize that, this interest rate is taking me over $2,000, may not be the best option. Or you can use that option and shop around because you know your numbers. It doesn't matter what the market is doing. You know your numbers and you know what you feel comfortable doing. The reality is the rates are going to continue to shift. The great thing about real estate is that there is a such thing as refinancing. So even if you get in at this rate, there's always room for you to adjust later and come back and say, hey, I'm ready to refinance. Don't do that before you're ready, especially if your rate's super great. Like, don't do that. But don't let these interest rates scare you. Like, as long as your numbers make sense, you stick to your budget, you stick to your max of how much you're willing to pay on a monthly basis, then you have to move forward. Like, we can't live in fear. We can't live in the fact that, oh, this market is doing this market is doing that. The market is going to continue to act up. In case you haven't noticed, the market is going to continue to act up. I've given you at least 3 steps of things that you can do to find the best rate for you. But I don't want that to scare you away from the process. So again, just to recap, do not let these interest rates scare you. Get your pre-approval, find out what the interest rate is. It's usually on the pre-approval letter, and boom, hop on Google, Google credit unions, Google community banks, Google other lenders, and go to their sites. See what they're advertising for rates. Now, granted, some of them do say as low as, so you won't know if you actually even qualify for that low rate until you actually get pre-approved. But the great thing about pre-approvals is you usually have about a 15-day buffer of when you can actually get multiple pre-approvals without it hurting your credit. That's the biggest point. People will get nervous that it's going to hurt your credit. It's not. As long as you are shopping around within a certain time frame, which is usually 15 days. I know some people say 30, some people say 45. As for me in my house, 15 days. Because I don't need the credit bureaus doing nothing with my credit, because I got plans for it, okay? So get the number from your pre-approval, shop around, go to Google, see what's out there, and then the third step, there's 4 steps. The third step is to see what you like and reach out to them. Explain your scenario, explain what you have going on, and see if they can offer something better. And if you know that you want to still work with your lender, you take that information back to the original lender and say, hey, you're offering 6%. Julie over there is offering 5.1. What can you do? What can you do? What can you do for me? It's all about leverage. It's all about the numbers. It doesn't matter what the market is doing. It doesn't matter what inflation is doing. It doesn't matter what these interest rates are doing. The market is going to continue to be turbulent. What you need to be concerned with is what your numbers look like and if they make sense for your lifestyle and your budget. If the numbers add up, girl, go for it. So that's my TED Talk for the day. Thank you for watching, and move forward with your home buying process.